When stocks opened today, it seemed like it was going to be a bit of a bearish day for the markets. However, we did get some promising sales data after Cyber Monday and also Black Friday was accounted for. We also had some positive commentary regarding the upcoming G20 meeting and, of course, the dinner between President Trump and President Xi. And so we did get a little bounce in the markets here today for the most part. The Russell 2000 was still down, but importantly, the S&P 500 was up enough where our intermediate posture did revert back to bullish. And so that's something new to present here today. In our trade application, I thought we would focus on a sector that did quite well here today and a stock within that sector that seems to be breaking out. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's November 27th, 2018. First of all, if you're new, welcome aboard. We're grateful to have you in our audience here tonight. Remember, you can sign up for our email distribution list by clicking on the description area in YouTube. While you're over there, subscribe to our channel as well. You can also follow us on Twitter. My handle is @BrandonVanZ. And we also have a Facebook presence. Check out that web address embedded in the logo in front of you. All right, let's go ahead and jump into today's analysis. As you can see, I do have chart 4B pulled up in front of us here for those of you that are premium market scholars that want to follow along at home. So this particular chart setup is just going to be a 4-grid that will allow us to kind of look at 4 key equity indexes here in the United States over the last 3 months. Each one of the candles represents 1 day in time. And as you can see, the S&P 500 up here did close higher by 0.33%. You can see that this was enough of an upward trajectory that we did revert our posture from bearish to bullish as a result of that move. You can see that we closed near the high. In fact, it might have been the exact high of the day. Notice that the background color of the chart is now green over here, whereas yesterday it was red. And reminder to look at that intermediate line to help you establish that posture there. So that intermediate green line that you see down below there is just coming out of that lower reversal zone. In fact, you can see it a little bit better there in the label. It says 22.71 and rising. Remember that the lower reversal zone is at 20 on the market forecast. So if it's at 22 and rising, the green line, then that means that we do have a bullish posture yet again. On the other indices, we're not quite there. Notice that we're still with the pink background here with the Dow Jones, even though it was up 0.44% today. We still have that pink background for the NASDAQ as well. It was up today, but only 0.01%. And then the Russell 2000 was a little bit different. In fact, it's almost it's reminiscent of the S&P 500 in terms of the changing of the posture. So notice that the intermediate line is now at 20.55 and rising. So we do have that green background color of the chart. But it's interesting to note that we actually had a down day for the Russell 2000. So small cap stocks in the United States struggling on a relative basis here today, down 0.87%. Let's go ahead and take a look at how our 3 green arrows are shaping up here. So that's going to be chart 4C. Again, it's going to be the same 4 indices that we're looking at here. And we do still have a kind of a negative posture towards the 3 green arrow setup here. As you can see that all 4 of these charts do have that light pink background on this particular chart setup 4C. What that reminds us of is that we actually have 3 red arrows. Remember, if you're going to be a trend trader, typically you're going to want to have 3 green arrows and higher highs and higher lows on the chart. Right now, we continue to struggle. Obviously, a lot of people are holding out hope that perhaps we put in a double bottom here recently. But then again, only time will tell if that holds or not. One of the fears that I have is just that it didn't seem to get violent enough. There wasn't just that moment where everybody threw their hands up and just kind of gave up at the same time. A lot of times that's kind of what you need in order for the markets to kind of bounce back higher. Until then, it's just kind of meandering, and that's where we kind of find ourselves right now. And there's a lot of news out there. Obviously the G20 meeting that I mentioned in the intro is front and center in investors' minds. That'll be happening this weekend in Argentina, and so we will keep our eyes on that because that has the potential to launch the market either higher or lower. And so there should be some volatility early next week. But as of right now, we have 3 red arrows across the board, and those 3 red arrows are referring to the 30-day moving average, where price is below the 30-day moving average, the MACD, where the reading of the MACD is below zero, and the stochastics, where it's just showing that the bears are in control of the bulls at the current time. And we've been seeing a lot of closing prices near the lows of the ranges in recent weeks. Let's go ahead and take a peek now at our next chart setup here. This is chart 4D, and this is our long-term orientation chart here. This is a 3-year weekly candle chart that we're looking at here, and this is a 1040 crossover method that we're applying to it. As you can see here with the Russell 2000, that was kind of the leading index to the downside here recently. That's why you can very clearly see that it has indeed crossed over, and some of you will refer to that as a death cross. It's something that we've been pointing out the last couple of weeks. But anyway, we'll see how long that lasts. Right now, that is one of the weaker areas of the market. We are in jeopardy of losing the S&P 500 and the NASDAQ as well from that perspective. The Dow Jones remains somewhat safe here. As you can see, the MACD is still clearly above the zero line. So the Dow Jones perhaps is a little bit more resilient in this market just because it does have some of the more stable names out there, your Procter & Gamble's and Coca-Cola's of the world. So it's kind of maintaining a little bit more resiliency than some of those other areas that are focused on the economically cyclical areas. All right, let's go ahead and take a peek now at our next chart setup here. And this will be our chart 4E. This will be an intermarket analysis 12 grid. And as we're looking at this here, remember that the background color of each of the charts will determine whether we have a bullish or bearish posture on the security in question using the intermediate line on the market forecast indicator. And so what I'm generally looking at when we're going through this analysis is just strong trends or perhaps reversals of trends. And I'd say that the best looking chart on the board, at least to the upside, is the chart in the lower left-hand corner, and that's your US dollar. Notice that we're bouncing off of that rising moving average here over the last week. We nearly hit a new high. In fact, intraday, we hit a new 3-month high on the dollar here today, although we did close a hair below that. So we'll see if that has any significance starting tomorrow. But what we do know with that background color being green is that the US dollar is one of those areas where money has been drifting to here recently. And so remember, there are other investment opportunities beyond just the stock market. Sometimes people will get involved in currency markets. One easy way to do that is through UUP, which is an ETF that tracks the US dollar versus a basket of other securities. Now, we talk about it here in these videos quite a bit, just to remind you of the macro significance of the dollar. Remember, the dollar is the world's kind of reserve currency, and a lot of commodities are priced in dollars, so it shouldn't be a huge surprise to see gold down pretty significantly here today. It was down 0.68%. Pretty good looking candle there, or not good, but exaggerated candle, I guess you would say, to the downside. And so not a big surprise there. Gold is priced in dollars. When dollar is up, all else being equal, gold will likely be down. We are starting to get maybe a little bit of stabilization out of crude oil, but boy, it's been a long time coming. You can see that this has just been a death spiral here for crude oil. /CL is how you could pull that up if you wanted to on the Thinkorswim platform. That is your crude oil contracts there. But this has just been an ugly, ugly couple of months here for crude oil. And yes, it's true that we were up today by 0.87, but we have to remember that we lost, 20% in the last 3 months, 24% to be precise. And so when you get a bounce like we did today, you would have assumed that it would have been much more aggressive to the upside. But that's just simply not what we're getting. It's more of a whimper at this point. So we'll keep our eye on it. But right now, we still have that diagonal downward trend line intact on crude oil. Let's go ahead and take a look at our next chart setup now. And this will be chart 4F for the foreign stock markets. And so as we pull this up, again, kind of going into an international event this weekend with the G20 meeting, you can see here that we've got a mixed bag when it comes to international equity markets. We've got some of them bullish, some of them bearish. As I look at the various trends that exist out there, there's not a lot of great trends to the upside. There is kind of an interesting reversal pattern potentially shaking out here with South Africa in the lower right-hand corner, so keep your eye on that. It's nice to see it stabilize above that rising moving average. and it did put in kind of a double bottom pattern here earlier, about a month or so ago. And so you can almost give the impression as well, I don't know what you'd call that exactly, but perhaps an inverted Batman pattern. I don't know exactly, but it does look like an inverted head and shoulders pattern with the kind of funny looking middle there with the spikes. And so that's why I called it the Batman one. But anyway, it is starting to shape up a little bit better, so keep your eye on South Africa. In terms of strong trends, the trends that are strong on these charts are the negative trends, meaning that the downward trends are still intact for Canada. You also have a strong downward trend intact for Mexico. You also have a strong downward trend intact for Germany. So if you're looking for bearish trade ideas out there, perhaps Mexico, Canada, or Germany can get you done. Let's take a look at our next chart setup now, and this will be chart 4G. This is our U.S. sectors 12 grid. There it goes. And as a reminder, the chart in the upper left here, and this is chart 4G, the chart in the upper left is the S&P 500, and then the 11 charts that follow it are the 11 sectors that make up the S&P 500. And so, of course, the S&P 500 went back to that bullish posture, as you can see with the green background there. And with it are a handful of other sectors also bullish, those ones being the financials directly to the right of it. We also have discretionary directly below it, the industrials, and then last but not least, healthcare. Now notice healthcare finished 1% higher here today. Remember, the S&P 500 was only up 0.33% today, so healthcare has definitely been a relative outperformer here today and has actually been gaining a little bit of traction here more recently as well. Let's quickly take a peek at what's going on today, just to confirm that healthcare was indeed the best performing sector, up 1% in the S&P 500 here today. The worst performer was down here, XLB, and that's your materials space. But I also wanted to share with you guys, since it is early in the week, many of you know that I try to produce the sector selector tool, and that's available over there on the Market Scholars website. And one of the things that I try to do is put that together every Friday. And so since it's only Tuesday, only a couple trading days have passed since this has been released. And what I wanted to point out for tonight's conversation is right here, healthcare did move up a slot. Now, it's not a dramatic move, but at least it is showing improvement on relative rankings that I'm using. And remember, I'm ranking these sectors by 10 different technical indicators. And so we were at the 5th slot last week for healthcare. We did get bumped up to the 4th slot here as of this last Friday. And who knows, perhaps healthcare can get into that top 3 arena there by the end of this week when I produce the sector selector this coming Friday, assuming they maintain this strength that we saw here today. And remember, in my class that I teach on Mondays at noon Eastern time, my top-down trend trading class, we do concentrate on stocks within the top 3 sectors. So that would be significant, even if healthcare could move just one more slot up into the 3rd ranking, for instance. Also, while I'm over here on the internet, just a quick reminder that if you guys are watching these Market Outlook videos on our website over at marketscholars.com. Remember, you can just click on blog in order to access them. We try to make it nice and convenient for you to show a little appreciation with clicking like and thumbs up and all that kind of fun stuff with social media. So on the videos itself, you can see you can watch the video right here. And then down below here is where you would be able to click like on Twitter. If you click on this graphic here, it gives you a thumbs up on Facebook, and then we also have one other like here just for our website itself. So one quick area of our website where you can give us 3 different likes to let us know that you appreciate these daily videos that David and I do for free for you here. And thank you to the 104 people that clicked like for me last time around when I did the video a week ago. Generally, if I'm getting over 100 likes, I feel like this is worthwhile for David and I to take a couple of hours out of our day to produce these for you. So keep up that effort on your end. We certainly appreciate it. Also, make sure you're taking advantage of our trading rooms on a daily basis if you are a premium subscriber to Market Scholars. I taught my dividend growth investing class earlier today. We had an outstanding conversation regarding 2 consumer staples companies with above average historical yields that have long histories of raising that dividend. And of course, David taught his directional option strategies class. Tomorrow, the next class on the docket will be David's options inventory trading class, and that's at noon Eastern time. And then I've got my strategy lab tomorrow night. So anyway, just a reminder there to take advantage of those resources if you are a premium market scholar. All right, let's go ahead and pop on back on over here to the paper money account now. And I wanted to discuss our trade application idea for the day. I'm going to come over here to chart 4A for this, which will just be the market forecast 1 grid. And the stock in question that I wanted to bring up was Hologic. And as you can see here, I've got a 3-month chart of Hologic pulled up, and we are at 3-month highs as of today. So I thought it was interesting. Not only did we get good price action out of the XLV, remember this is the healthcare select sector spider, and this is giving you a good sense of what's happening with healthcare stocks generally speaking. And today's move in healthcare was so significant, we went from a bearish posture to a bullish posture, somewhat similar to what we saw there with the S&P 500 itself. Also similar to the S&P 500, we closed near the highs of the day, if not the exact high of the day on XLV. Notice we have that nice open candle right there, giving you the impression that had the market been open longer, we probably would have gone up further. The only thing that stopped the prices from continuing to go up was the closing bell itself. And so healthcare not only is working its way higher on my sector selector, but was also the best performer in the market today from a sector perspective and did close at its highs. So back over here to Hologics, which is ticker symbol HOLX, you can see it is also breaking out. Now notice we've actually been going up a few days in a row here at this point on Hologic, but today was a significant day because we did hit that new 3-month high. This is not an all-time high for this stock, but it's a multi-month high for this stock after stabilizing here a bit recently. The other good news is we closed near the high of today's session, and we closed with a new closing high as well over the last 3 months here. Remember, sometimes we get an intraday type of a breakout, and then we end up closing a bit lower. Like this one had a long upper shadow there. That's not always the best sign, and you can see that did spell trouble for this stock in the days immediately after that. So we don't like to see those long upper shadows, so it's good to see us closing near the high, closing near 3-month highs or at 3 months highs at this point. You can also see that from a market forecast perspective, we do have that green line now in the upper reversal zone above 80. And remember, that's a sign of a very strong trend. And that's the type of thing that we're looking for if we are trying to establish bullish trade ideas. And so that's what I thought we would do tonight, since we do have a bullish posture on the S&P 500, a bullish posture on the healthcare stocks in general, and now we can clearly see that this is a bullish stock within that area. So let's go over here to the trade tab. And for this trade idea, what I wanted to do was load up what's called a long call vertical. This is going to be a debit spread, so it'll be a little different than oftentimes we kind of talk about those credit spreads in these presentations. This will be a debit spread. But it has a use occasionally as well. It's more directional in nature, at least the way that we set them up using the deltas that we do. But it can also offer greater rewards occasionally as well. So let's go ahead and load this up. Typically what we do is we buy the first one that's in the money and we sell the first one that's out of the money. So in this case, Hologic is trading at 43.67. So the first one in the money would be the $43 call, and the first one out of the money would be the 44. So let me go ahead and right click on the 43 call, and then I'm going to come over here to buy vertical, and that loads up our trade down below. Now what caught my eye on this one in particular was that it's a way that we can have kind of a head start in a race. And what I mean by that is you'll notice that we've got this 43, 44 long call vertical loaded up down below here. You'll notice as of this moment in time, which is after the market has closed on Tuesday. Remember, we have no idea how these stocks will open the following day, but just making the assumption that this is priced very similarly when the market opens tomorrow. This debit spread is 55 cents. So $55 would come out of your pocket for every contract that you would do here. Now, the reason that I was mentioning 1 foot head start in a race is that if you added the 55 cents to the 43 long call, you, of course, have $43.55. That's effectively what your break-even price is on this trade. If we fast forwarded 24 days here to when these December monthly contracts expire, and this thing we're trading at 43.67 where it's at right now, that's already above break even. So in other words, most debit spreads, you kind of need action. You need directionality for you to profit. Theoretically, this thing could stay exactly the same for the next 24 days, and you would win this trade. Now, you wouldn't win a spectacular amount or anything like that, right? You'd only win 12 cents, but it's a 12-cent head start since the merchandise is priced currently at a price that's higher than where your break even would need to be. Now, ideally on a trade like this, you actually want it to close above 44 or wherever your short strike is. And so that's what we're truly cheering for, and I think there's a decent chance for that, assuming that the momentum can continue. At that point, we would have a better opportunity for maximum gain. Now, a lot of times I don't like to do the $1 wides on a debit spread. But in this particular case, given the head start that we have here and the uniqueness around that, I thought that's what we would implement here for our educational trade application example for tonight's video. So with that, let's go ahead and click on confirm and send. There's that break-even price I mentioned a moment ago, which will be 43.55, and I'm going to go ahead and send that one off. If we come on over here to the chart, basically 43.55 is right there on the chart. So if you assume that this momentum will continue to the upside, that could end up being a profitable trade for you into the December options expiration. All right, well, I want to thank you for joining me here tonight. Again, it was a little bit of a quiet day in terms of percentage returns, but it was a more optimistic day at the same time because we started the day off with a negative tone, and although we didn't roar higher throughout the day, we did close near the session highs in many cases, and especially there with the healthcare sector that I mentioned a moment ago. So perhaps some stability brewing there, but all eyes are on the G20 this weekend, and so until that is over and done with, the market will probably remain a little bit jittery. So with that, I want to wish you all the best with your trades and your investments. Goodbye for now.